Good afternoon, everybody. Appreciate y'all coming out for Triumph's panel today. We're going to talk about getting paid in 2023, but really also want to talk a little bit about why we're here at Matt's this week. First of all, did any of y'all get to participate in the barbecue from yesterday? Anybody have any of our barbecue yesterday? Well, the Triumph team, thank you very much. Glad y'all got to participate. But yeah, we did. We were able to bring out our 53-foot trailer yesterday. We're smoking brisket and sausage. Made about 600 pounds of food yesterday. So we were able to feed probably 1,000 plus people yesterday here on the first day. So really appreciated the hospitality and just the opportunity to bring some of that Triumph barbecue out here. When we take that truck out around the country, we always get that question. So y'all a barbecue company, or y'all have a restaurant somewhere? And we don't. The barbecue is really just the fourth brand of Triumph Financial, and just something we're very passionate about. And with our return to Matt's, we really just wanted to be able to bring that out. So again, if you didn't, please look for future opportunities to be able to have that, because that barbecue really just goes hand in hand with what we do every day. Some other things that we really wanted to acknowledge too. When we first started talking about this panel, we wanted to talk about what it meant to get paid in 2023, but as we kind of look at where 2023 is right now, we wanted to also look at what does it mean to run a trucking company in 2023. And something that Triumph was very sensitive to in 2022 was the need to be more of a financial partner to our clients, right? We were hearing a lot of feedback, that they were looking for more. They wanted us to really look more holistically at their business. And so in late 2022, in December, we announced the consolidation of a lot of our different brands into one, and now it's just the Triumph brand. So for years, everyone knew us as Triumph Business Capital, just as the factoring side of Triumph, but now the Triumph Insurance Group, Triumph Commercial Finance, and Triumph Business Capital is all under one Triumph brand. And what that's enabled us to do is to really look more holistically at our clients' businesses and really be able to see how we can serve them better, especially coming out of 2021 and 2022. So that's really what we're here to talk about today. And so I'm really grateful to all of my colleagues and partners here that have joined us for this conversation. We have Jason Mulligan, who heads up our sales on the factoring side, Julie Parker, who leads our insurance sales division, as well as, of course, friend and partner, Chad Boblet, who hopefully y'all saw speak earlier, gave some really, really great advice and insights on what it means to work with brokers and to maximize rates. And of course, Tim Witten, who leads our fuel department as well. The goal for today, again, is just really to have a conversation. Where are we at in 2023? What are they hearing? What are they seeing? And then what are we doing to proactively to meet that moment? And y'all, this is really loose, so if y'all have any questions, please just raise your hand. Let me know. We'll be sure to catch those along the way. But to get started, Jason, from your perspective, obviously, you've worked with thousands of carriers over your career. How has the conversation shifted for you? 2020, 2021, demand was red hot. Now we're having slightly different conversations. So from the carrier perspective, what are you hearing?
That's a good question.
I don't think, is it on?
Testing. Yeah, that's a good question, Eric. I think you touched on it. It's changed mid-22 to 2023. Now companies are looking for a partner, somebody that can help them charter these turbulent times, whereas in post-pandemic 20 and 21, things were very robust. So they were looking for somebody, a partner that could get them paid quickly to take advantage of this attractive time in the business, which 21 was a record year for transportation. And so things have shifted now with the headwinds in our space. You've got lower freight rates, you've got revocations at an all-time high. Freight rates are a three-year low. And so it's tough right now. And that's why we're trying to present, and another reason we're here is to represent Triumph as a transportation solutions provider and not just a factoring company.
And Julie, from your perspective, on the insurance side, how have those conversations changed from 2022 to 2023?
Last year, 2022, was interesting. Everyone was focused on growth. We had owner-operators, we had company drivers all looking to come and start their own business. So last year we were focused on helping find insurance, get them the right coverages they needed, and help them understand what they needed so that they could run their business. This year we're continuing to do that, but we're seeing a little bit of change where there is not as many new ventures coming in. We're still able to help the new ventures, but some of them are signing back up as company drivers and some of them are going back to owner-operators. We've seen a few more come in this month now, wanting to start up as new ventures, and so that's been exciting for us.
And before we get Chad's perspective, Tim, on the fuel side, clearly there's been a lot of volatility that we saw. Now things have kind of settled back down a little bit. But from your perspective on the fuel side, what are you seeing right now?
Thankfully, right now, fuel has stabilized a little bit. Last year was fun if you're in the fuel business because, as you know, it was up and down, but mainly it was crazy, and we had to really watch it closely. We had outages on the East Coast. Fuel hit record highs. My job was to try to find the lowest price fuel for all my carriers and send them to the right places. And it was, when I say it was fun, it just kept us busy. Luckily this year, since the beginning of the year, things have really calmed down. Fuel as of today, the average is down about 90 cents a gallon. That's on diesel, of course, for this year. It's expected we're not going to be running out of fuel this year. It's even going to go lower, is the expectation. The refineries have caught up, so we're hoping now that fuel's going to be a little more stabilized and you can run your loads, know what you're going to pay for fuel a little bit easier now than you did last year. Because what you spent on fuel last year just for one trip across the country could go up 7 times in 7 days. Now they're more stable, and we're expecting it to stay that way here in 2022.
And Chad,
Or
both
23.
Oh, absolutely. And Chad, from both a business owner perspective, but also just as somebody who really has the pulse of the industry, what are you hearing from the carrier community right now?
Well, we're just now the spot. I do mostly spot market, running with brokers. Maybe 90%. I have had some direct shippers in the past, but I choose to run the spot market. I would say for about a year we've been in a down cycle. Rates keep on going lower and lower. I predict, being conservative with the numbers, I would say it's going to continue to get lower. Rates tend to follow the unemployment number, and economists will tell you that unemployment is going to continue to get worse over the next 9 months. Long range, I think, will stabilize between now and the 2024 election, like always. Before that, we had a great run and probably seen more carriers jump in. It's kind of like the gold rush. Anybody that knew nothing about running the spot market could jump in and get $3, $4, $5 per mile on good long runs. That's not the case anymore. Now you have to use tools and be more fine-tuned with what the market's doing, where to go, or if not, you're going to be facing a situation where you're going to be spending more than what you bring in, and that's going to cause a lot of people to drop out.
Great, thank you all for that. Jason, you talked a little bit about it before, just what we've seen over the last couple of years and how we have had to be responsive to that, as the financial partners for so many. Maybe you could dig a little bit deeper on what were some of the proactive steps that factoring companies do take, during times of growth, but also, now, right, when everything's a little bit choppier.
Good question. Now, you really just have to know your customer and know what they're going through. So you have to get in the trenches with them, go through discovery, and try to customize the offering to give them the level of care that they need to operate their business. And so what you'll really hear from trucking companies that use a factoring company is just make it easy on me, be a partner, and have some level of automation. And automation has made things a lot better and a lot faster, so the carriers can get paid a lot quicker, which just has improved dramatically the customer experience.
Yeah, and Julie, I would ask a similar question, right? I mean, you talked before a little bit about some of the growth that we saw and how you were addressing that, but especially now, how are we providing education to them to really understand? We've talked before a little bit about maybe some of the misconceptions or assumptions when somebody comes into the space. How are you educating your carriers so that they know?
Great question. So one of the main misconceptions is that the best thing to do when you start your company is to grow and to grow fast. But that's not true for insurance. Insurance companies actually have it built into their policy. Well, they want you to limit your growth. So what we've been working with lately is our clients come in and they have an opportunity for growth. But the insurance companies actually have limitations to where they can't grow. So as a new venture, you have one truck. You are limited usually with most markets to only adding one truck per year. That's hard because you're getting started, you have a contract, it's gonna let you grow, but you need to add a truck and your insurance company says no. So what we do is we try to, with Jason's team, we try to understand the client's needs. Do you have a contract? Do you have a reason that makes sense for us to go to your insurance company and give a narrative that tells what you're doing, why you're doing it, and why it makes sense? Sometimes we have to do that midterm because the contract comes up during the year. Other times that happens at renewal, where when we're having the renewal conversations, we start hearing about what you want to do and how you want to grow. Once I find out you want to grow, we then have to sometimes change the plan of what markets we're approaching that will allow you to grow.
Great. Tim, similar question on the fuel side. In terms of the education component, especially during these types of times that we're in right now, what type of advice would you give to carriers to really maximize those savings?
Well, to maximize fuel savings, I think so, to understand the cost of the fuel. One, I would definitely not pay retail price or cash price at the pump. There's options out there for every size of trucking company to save money, either online or through a card program. And they will, especially the card program type of deals, they'll take all the gallons and they'll be able to use that power to drive lower prices at the truck stops for you. Other ways, there's route maximizing, different programs of things that you could use. But to understand the cost of fuel, you either go with a cost plus type pricing or retail minus type pricing. Cost plus is probably the best way to save money. Most times of the year, you'll save the most that way. If you don't understand cost price, it's pretty easy. There's about 1,500 racks around the country where they pick up the fuel and then they take it to the retail location, the truck stop. And basically, there's that rack price and they charge transportation and taxes. And there's where they set the price and then they put their margin on top of it. When you have a cost plus pricing set up, you will save the most money because you're going to save that money between the margin and the cost. And most of the times of the year, that is your best way to save money versus a retail minus type where they just take the retail price. They say you're going to save, let's say retail minus 10, you take 10 cents off of that, that's what you save. But margins are great right now for fuel. They're making a ton of money at the truck stops, and you're going to save a ton of money on cost plus because you can save 50, 60, sometimes 70 cents a gallon just by being on a cost plus program. And also knowing your route, where you're going to go, plan ahead, use the route optimizers or whatever you have, plan ahead where you want to fuel, know who you have the best savings with, and make sure you go there. And also watch the state. If you're not on cost price, that actually makes a lot more sense. Cost plus, you don't really have to watch the sign as much because you have that type of pricing. But sometimes the states have higher taxes than others. And just if you're going to cross the line anyway, you got enough fuel to get there, go there and fuel up and save those extra however many cents that may be. As we know, that all adds up fast when you're getting 6-7 miles to a gallon. So.
And Chad, from a business owner perspective, you talked earlier today about how to maximize your efficiencies. You gave some great tips on how to the dumbbells and all of that. So how do you bring in the fuel piece of that too to make sure that people are actually maximizing their savings as well?
Maximizing savings. I like messing with numbers. I like messing. There's some great programs out there to keep track of your costs and see the money going in and out. Once you grow and you get established, probably one of the best ones to use is QuickBooks. Not Quicken, but QuickBooks. I say that because it allows you to grow. You can add on as many numbers as you want to coming in, going out. A lot of the other specific to trucking, they kind of limit to how far you can go with it. The other downside, if that's all you use is something that's geared toward trucking for your accounting, It's better than nothing. But the reason why I like for people to tell people to use QuickBooks is because no matter what CPA you go to, they understand it and they can use your login and pull out the numbers. If you're using trucking related, then they have to figure out what you're telling them, what each of those categories are. And the next simplest form, if you're doing nothing at all, start off with, I'd say Google Sheets. Many of you might know it as Excel spreadsheets. But keeping track of your numbers, and that's what earlier when I talked about discipline with rates. When I run my numbers and I look at my average, I'm going to make sure my average does not fall below a certain number. I want to do this every week with every single load that I get. I want to see the money coming in. I like writing down the numbers at the end of the day. If I'm sitting in the sleeper, let's look at the numbers. Let's see how much money I made, and the most discouraging thing ever is to go and work all day long and then run your numbers and realize I didn't make no money at all, or I broke even, or I would have made more as a company driver. That's the reason why I became very disciplined with my numbers. And then with those numbers, you can also look at each single category, and if you can lower each of those categories, think of a way. What can I do to lower each of those categories just by 1%? 1% a month would be 12% at the end of the year. That's a pretty big savings if you can lower those costs. Like we were talking about, fuel cost is one of your highest. Insurance, if you can go in, figure out maybe you need to adjust what the I had to go and lower my price on my trailer. My trailer is not my 2014 trailer is not nearly worth $30,000 what I paid for it 3 years ago when trailers were, getting sold at such a high price. Going back and lowering those prices will help out. And the whole entire doing the Excel spreadsheet and seeing it right there in front of you, what can I do to lower each of those categories, helped me the most, and it helps out anybody else. Fuel is knowing what you spent, knowing your mile per gallon and your cost per mile, your fixed cost, your adjustable cost, and what you're getting, what your mile per gallon is. What are you getting per mile, and what your rate per mile is. I mean, those are the key numbers that I got to know every single load.
Great. Appreciate that. Julie and Jason, y'all touched on something earlier that I think is important to maybe talk about a little bit more. You talked about how closely your teams work together on the insurance and on the factoring side. And so, Julie, maybe you can shed some light onto some of the innovative programs that Triumph has that's allowed us to kind of work hand in hand on the factoring side as well, but ultimately provides more value to the carrier.
Everyone needs insurance. You have to have it, but no one wants to pay for it. And the down payment is the worst part of it. So we work to try to understand your needs. Is it the down payment that's the struggle? Do you need a lower down payment, or is it your monthly payments? And so that really changes from client to client. What I find important is to first understand that, and then we can look at, do you need help breaking the down payment into 2 payments? We have a program that can do that if you factor with us. Do you need more payments than the traditional 9 payments? Do you need a 10-payment plan? If you factor with us, we have the ability to extend you even to 12 equal payments, which means you can have a payment the same amount every month for the whole year. And that lets you really plan and track and know what your expenses are. We have also had the ability to partner with an insurance company and create a program that charges your price per unit on a daily rate. So it's referred to as our daily rate program. And if you factor with us and you're on the daily rate program, then the insurance premium is taken out of your factored invoices. So as you run and you turn in loads, we automatically take the premium and send it to the insurance company for you. And it's one less thing you have to worry about. And that bill, which the auto liability premium is your highest bill, that one's already paid for you. So that program has been very helpful. And we can do that with our factoring customers because we're able to know what you're factoring. We're able to understand your volume. And with that, we can help you get the payment plans you need, whether it's more payments or a lower down payment.
Great. And Jason, can you maybe elaborate from your side how that's providing value to the carriers?
Well, as I mentioned earlier, authority revocations are at an all-time high. And one of the number one reasons they are at an all-time high is when the carrier's insurance renews, they can't come up with enough money for the down payment. Therefore, this program, the daily rate program specifically that Julie just mentioned, is an alternative to that without having to come up with a large down payment or the 12 equal payments. So it's just given them options versus, hey, I just need some help getting through these choppy waters, and then the next season I'll be okay. And that's all that we're trying to do.
That's great. Thank you. Some of the other questions that we get, I think, are addressing some of the maybe misconceptions or maybe just some things that need more clarity in our respective areas. And, Jason, maybe since you got the microphone, you can continue to talk about, especially right now where things are at, fraud and things like that, remain, top of mind, across the transportation industry. And so when you think about working with a finance partner, a factoring partner specifically, what are some of the other advantages that go into that?
Well, you want to make sure that your lender is secure, especially now with all the noise around banking. You want to make sure that you are with someone who is going to be there for the long haul. And so security has really risen on the list of priorities for trucking companies. And then just fast ease of interaction and the automation, which gives visibility to all the participating parties, whether it be the shipper, the broker, the carrier, all on one platform. So things have definitely changed in transition, but to your point, security is top of mind for a lot of companies right now.
And Tim, on the fuel side, can you highlight some of the risk mitigation that carriers can take on the fuel?
Yeah, unfortunately, and I hope nobody in this room has had to put up with it, but fraud has reared its ugly head in the fuel card industry. And it's costing tons of money. Right now, there's a lot of work being done on correcting this. It used to be where they would put a little device over the card reader, and they'd slide their card in there, and it would pick up the information. You can see it's different from the other ones. You can jiggle it if it comes off. If you're using a card, do that. But now they are getting a little more sophisticated, the bad actors out there, where they're getting into the pumps, and they're putting what they're called a skimming device. And they're really just electronic devices that they can clip in like a microchip, and they'll sit just outside of there, and they're Bluetooth enabled, and they can pick up your card information, any card information, and it goes directly to a laptop. So what I would suggest to everybody, one, if you fuel up, look at the tape that's on the pump. Make sure that's not cut. If that's cut, go away. Secondly, never use the farthest pumps away from the deal desk or the diesel desk. That's where they like to put them in because they can sneak up there, they can do their thing, they can sit out in the corner and watch it. The closer they are to the actual station, they're going to get caught. So don't fuel up at especially those last two lanes. Totally avoid them. Wait in line if you have to. It may take you an extra 30 minutes to fill up. It's going to be worth every penny to do that because
That's a new one, and that's good advice.
Oh,
I've never
it's-
thought of that before.
and again, I deal with this daily, if not weekly, and that's the advice to everybody. The last thing is especially if you have a fuel card, look at what they're called control limits. Look at your spending limits and your control limits. How many transactions a day? Make it one. That way, if they do steal your card information, the first thing you're going to do is go out and try to run that card before it gets caught. If you have one transaction in a day, guess what? You just used it. That card's going to be dead to them, and hopefully they're going to throw it away, think it's no good anymore. Make sure that your dollar limits and your gallon limits, wherever you have on those cards, they're adjustable. You can do it yourself online. Make sure they're in line with what your truck is. If you got one tank or two tanks, make sure you know how many gallons it'll fill. And most of these fuel cards will shut off. If it's 50 gallons and you set it at 50, it'll shut off at 50. It won't run any more than that. That'll limit your exposure. But again, it's out there. The bad actors are there. There's some great products coming from the card companies right now with like third-party authentication and different things that are going to most likely stop this. But until it's here in the next 60, 80 days, these are just some tips that will hopefully keep you from experiencing it, because it's out there and it's happening at the major truck stops and the independents.
Great, thank you, Tim. Looking ahead a little bit, Chad, you've shared your story and of how you came into this industry, and something you've always said in these conversations is that you would do it again in a heartbeat. You would start a trucking company no matter the season. So maybe looking ahead to 2023, we don't really know what to expect, but maybe you can just shed some light into somebody who wanted to start a trucking company this year, and what advice would you give them?
Yeah, that's a good one. I like talking about this. As much as doom and gloom as I'll talk about, with what I see that's going on in the spot market and how much worse it could be from here till the next at least 9 months. I've ran the spot market for 12 years. If I woke up tomorrow and this is all I had and the CDL that's in my pocket and a good credit score, I'd be doing the same thing I'm doing now, which is I bought my first truck with 4 credit cards. I'd probably pull out another 4 credit cards and go buy another truck and run the spot market. I know how to do it. Yes, running coast to coast, you're going to get $1.75 from here to California and $1.50 coming back. If you continue to do that, your maintenance cost is going to go up because you're going to put on more miles on the truck. But if I run here in Kentucky 200, 300, 400 miles per day, I'm home every night, then I'm gonna make good money. I'm gonna make more money than I would going back to being a company driver. I've had it, and a lot of people say, well, since you've been doing this for 12 years, why don't you have a lot, lease on a whole lot of trucks to and company drivers? My main answer to that is, she works with insurance, the main reason why I don't do this is because I got too good of a thing with my one truck, and I never want. I told you if y'all were here earlier, I worked with TMC and McLean. Probably isn't 2 other harder companies to work for. I never want to go back to doing that, especially once I've experienced the good life of being an owner-operator and being in charge. I can always make more money with my one truck, even if I have to do the short runs, than I ever would being a company driver and running hard miles like I used to.
Yeah, great. Appreciate it, Chad. And Jason, from your perspective too, what are some of the positives you see, in starting a trucking business this year?
Positives
Yeah.
in starting a trucking business?
Yeah.
Well, you know how tough it is. And so if you can survive in this climate, you pretty much can survive in any climate. And transportation is not going away. It's always going to be needed, even with the mention or rumors of autonomous trucks and things like that. Trucking is not going away. So it's a stable industry to get into, even if you're getting into it for the first time.
Great. Thank you. So again, the goal today was really just to have a conversation around the transportation industry. Where are we today? But really look at it from the unique perspectives, from fuel, from insurance, and from factoring, and obviously with Chad to kind of give the business owner and the and just kind of that voice of the carrier perspective. Does anybody have any questions or anything that we can address and talk about a little bit here while we have the team here today? Barbecue recipes, we can talk about that.
You got fuel card people here, insurance, very smart.
Yeah, we'll be back here for a little bit. Okay. Just.
Oh, okay, I'm sorry. I got a question about the insurance. Y'all was talking about you can break the down payment down to 2 payments or 10 payments a year or 12 payments a year. Is there a discount if you just want to pay the insurance up front for the whole year itself?
Thank you. I was going to talk really loud. We are an agency, so we represent multiple insurance companies, and that option is available with several insurance companies. I will give you one piece of advice with paying your insurance premium in full. So there are companies who will allow you to do this, and you do get a discount. However, during the year, if you buy a new truck or add an owner-operator, you are on a full pay premium plan, which means the entire premium for that new truck is due at that time. If you are also doing plates, tags, and all of that, you now have a really large bill. So I like to recommend to negotiate a really good finance plan or payment options. There's quarterly, there's a bunch of different ways you can do it. But a lot of times I've seen insureds or clients take that discount, but then when they go to buy a truck, it limits their growth because they can't pay that premium in full.
Okay. And the other question I have is, like I have July, it'll be 2 years for my CDLs. I've heard it's good to have your CDLs for 2 years, or does that make a difference on the pricing of your insurance?
Oh, my favorite question. Yes. So there are a few insurance companies that will write a driver with, it doesn't really matter how much experience you have. You can have a month, you can have 2 months, you can have 36 years. They're going to base your premium on the driver. There's only one insurance company that does that. Most insurance companies are going to have driver guidelines, and the most common driver guideline is that you have 2 years consistent commercial driving experience. So if you are looking at starting your own business, my recommendation would be get 2 years driving experience on your own with a company and then start your own business. Because that, if you don't have the 2 years driving experience, it limits which markets I can take you to because you don't meet the driver guidelines.
Okay. All right. Thank you.
Your pleasure. My pleasure.
Great, great. Any other questions y'all have? Awesome. Well, thank you all very much for your time. We appreciate it today. Like I said, we'll be over there for a little bit, and if not, please come see us in the West Wing. Thank you all so much. Appreciate it.